Hey, what's going on? JP Albano here. In this video, I'm going to talk about what is forcing appreciation. You may have heard me talk about it. If not, we're going to talk about it now. But let's get into it. So forcing appreciation is this idea that, when we buy an apartment complex, we're buying it for $1 amount, right? Maybe $1 million bucks. Well, not really, like $15, $20 million. And we know that if we do X, Y, Z, we can raise it from 20 million bucks to 25 or $30 million. I'll give you an example. We have a 278 unit apartment complex in a suburb of Cleveland, Ohio called Shaker Heights. We bought this property for $16.7 million in 2020. And the cool part is we knew it's in a great area. There's a lot of desire to be in that area, to live there. There's a brand new apartment complex across the street. There's this $100 million mixed use development that went out there. And we know that the average price for an apartment at that new complex, just call it like $3,000 a month. The average rents in our property that we bought was about 900 bucks. So huge delta, we call it, huge delta there. And we knew that we can force the appreciation, the value of our $16.7 million property, we'll call it 17 million bucks. We'll call it 17 million bucks by making it look nicer, making the interiors look nicer. So that's what we did. We spent about $3 million renovating the interiors, the hallways, the common areas, and making it look nicer. And then, of course, the other thing that we did is we also have our own in-house property management company. So we train our staff to operate our property a bit differently from everybody else. It's part of our unique value proposition, and I'll do a whole video on that separately because that's a whole can of worms there. But when you change how people are treated when a new prospective customer walks in, it's a different experience, right? A lot of apartment complexes, they sort of treat everyone like they're a commodity. Hi, welcome, what do you need? And that's really it. So our approach is to build a rapport with the prospective client coming in and showing them, makes them feel a bit different from how they would feeling everyone else. So we were able to basically raise our average rents from, call it 900 bucks to just over $1,200. And by doing that, adding $200 or $300 a month in rent times 278 people, the math here. So we'll do it real time. So 278 times 300 bucks is 83,400 a month in increase. So, we were making 900 times 278, $250,000 a month in rent collections, and we added $83,000 on top of that, right? But what that does is because commercial real estate apartments, they're valued based on how much profit it makes, the bottom line. So you've got your revenue, you've got your expenses, whatever's left over is what's called your net operating income, your NOI. So it's based on how much NOI you have. And there's a cap rate that's used to determine that, and that's a video for another time. We'll do a whole thing about cap rates because it's a little bit nuanced. But basically, the more that you can increase your bottom line, your NOI, whether you're reducing expenses or increasing your revenue or a combination of the both, you're able to increase the value of the property. And so a few years later, when we were able to do a refinance on our property, we went from a valuation of 17 million bucks to a valuation of just over $30 million in over 2 years' time. And we did that not because the market had appreciated and people were selling more apartment complexes, but it's because we increased the profitability of the complex. And we did that because we made them more attractive. And that's the basics of how value add multifamily works. We force appreciation. Now there's elements to this, of course, but from a high level standpoint, just kind of getting started in how multifamily apartments work and what it is to be an investor is a great place to start. And it's one of the main strategies that we use to increase the value of the property. More importantly, increase the value for our investors who are passive investors in our deal. They put in 50K or 100 grand into our deals. And this is how we create the returns for them over a period of time. If you enjoyed this video, go ahead and subscribe for more.